So Chapter 16 is going to continue the discussion of cost allocation. But the focus in this chapter is going to be on the allocation of costs in situations where two or more products are produced using the same process. Alright, so what we are talking about in this chapter is cost allocation when we have joint products and byproducts. We have several learning objectives. Number one, we're going to learn how to identify the split-off point in a joint cost situation, and we are going to distinguish joint products from byproducts. We are going to understand why joint costs are allocated to individual products, and we are going to learn how to allocate joint cost using 4 different methods. We are going to identify situations where the sales value at the split-off method is preferred when allocating joint cost. And the sales value at the split-off method is actually going to be the first one that we take a look at. We are going to explain why joint costs are irrelevant in a sell or process further decision. And we are going to learn to account for byproducts using 2 distinct methods. So let's take a look at some of the terminology. Joint costs are the cost of a production process that yields multiple products simultaneously. The first scenario that we're going to be taking a look at is a dairy processing company, and this particular company purchases raw milk from several different dairy farms, and then they take this milk and they process it into 2 distinctly identifiable products. And these 2 products are the result of this process, and they are therefore joint products. Okay, so joint cost is the cost of production up to a split-off point. So the split-off point is the juncture in a joint production process where 2 or more products become separately identifiable. In the scenario that we're going to be looking at, we are taking raw milk, and at the split-off point, we have cream and liquid skim, 2 separately identifiable products. Separable costs are the costs incurred beyond the split-off point or after the split-off point. And those separable costs are assignable to each specific product that those costs are incurred for. And those are the separately identifiable products at the split-off point. Okay, so they're going to have costs incurred up to the split-off point that are called joint cost. And then they become separately identifiable products. And after the split-off point, those individual products are going to have additional costs incurred to process them. And those are what we call separable cost. Make sure you understand the concept. Joint cost and separable cost are 2 different things. We have some categories of joint process outputs. We can have products that have a positive sales value. Okay, so when we sell these items off, we actually bring in a revenue stream. We have a positive amount above and beyond what we have incurred to make the product. However, we may have some products that have a 0 sales value. Alright, so what is a product? It is any output with a positive sales value. Okay, so we are going to be paying attention to these products, and they are an output that enables a firm to avoid incurring cost. Sales value can be high value or it can be low value. We have terminology in regards to a main product, which is output of a joint production process that yields one product with a high sales value, our main product, compared to the sales values of the other outputs from the process. Joint products, like I mentioned earlier, are outputs of a joint production process that yields two or more products with a high sales value compared to the sales values of any other output. So we can have a main product, or we can have joint products. We can also have what are called byproducts. And these are outputs of a joint production process that have low sales values compared to the sales values of the other outputs. I want you guys to also understand that in some specific industries, we may have some outputs that actually have a negative revenue because their disposal costs, such as the cost of handling of non-sellable toxic substances, require special disposal procedures. Whenever we have these kind of disposal costs, we need to add those to the joint production costs that are allocated on to the joint or main products. Okay, so certain industries have some toxic outputs from their processes, and they have to incur additional costs and expenses dealing with those outputs in order to comply with laws and regulations. In a nutshell, we are talking about allocating out cost. Again, we're looking at a process that occurs, and at a certain point we have separately identifiable products. These are called joint products. We may possibly have a main product. Here at the point where they become separately identifiable, this is the split off point. Again, we may have some items that are outputs that have exceptionally low income stream from them. We could call those the byproducts. We may even have some output with zero sales value whatsoever. So for example, in this process right here, we've got steam. It's an output. It has zero sales value. Here's a couple of industries that give us some examples of some joint cost situations. I'm not going to read them all to you, but let's just pick out a few here. For example, this one that we're going to talk about quite a bit in some of our examples, when we're talking about the milk and dairy, raw milk can be processed into cream and liquid skim. Looking down here at crude oil can be turned into gasoline, kerosene, benzene, and naphtha. Alright, so you guys could pause the video for a minute and take a look at some of those. When we go about allocating joint cost, before a manager is actually able to allocate joint cost, he or she must first look at the context for doing so. Joint costs must be allocated to individual products or services for several different purposes, including computation of inventoriable cost and cost of goods sold. You guys are very well aware of the fact of how you go about calculating cost of goods sold for that income statement, as well as ending inventory. Of course, we've got to have that for our financial accounting reports, but also for complying with tax laws and submitting those forms that show our cost of goods sold as well as our ending inventory. So we need those for all of that. I want you guys to keep in mind that do not forget that absorption costing is required for financial accounting and tax reporting purposes. Okay, so under absorption costing, that necessitates us allocating our joint manufacturing or processing costs to those products so that we can do absorption costing. We also have to do it for reimbursing companies that have some products reimbursed under cost plus contracts. Okay, so if we are trying to get someone to reimburse us, we of course are going to be allocating cost and showing those costs to those parties that need to reimburse us. We also have certain industries that are regulated as to the amount of return that they can generate on the products or services that they provide. So for example, if we're talking about the energy industry or maybe telecommunications, they are going to have cost allocations that go to those underlying numbers that get used to make sure that they comply with those rates or prices that they're actually able to charge. Again, they're being regulated based on that information. And then, of course, anytime we've got some type of litigation or insurance issue, we, of course, will have to know what our underlying costs are. So we need cost allocation for those types of issues that arise as well. We've got two approaches to allocating joint cost. We can either do it market-based, which is allocated using market-derived data or our sales dollars or revenues. We can do it based on one method called the sales value at the split-off method. We can do it based on what is called the net realizable value or NRV. And we can also do one called the constant gross margin percentage. Another one that we can use is called physical measures. Now this one, we are going to have to come up with some type of way to measure the product, whether that be by weight or by volume, and we can do some calculations based on that physical measure and allocate costs based on those. I'm going to do a single video for each one of these. That way, if you need them while you're doing your homework or studying, you just only have to go and click to find the one. We are going to be talking about this example information right here on this first couple of items that we're going to take a look at. Again, we're going to look at a dairy processing company. They are going to purchase 110,000 gallons of raw milk from some farms. And they're going to process that milk into cream and liquid skim. And of course, based on what we're going to do on this first one, we are going to calculate what the sales value is for the cream and for liquid skim and use that to help us come up with an allocation of our joint cost. When we finally sell the cream, we're going to sell it for $8 a gallon, and when we sell the liquid skim, we're going to sell it for $4 a gallon. You can take a look at this information right here and then pick up on the next video.